Hi everyone, Darren Crett, Leviathan Financial Management with your weekly market report. A bit more of a somber tone this week after the debacle that's going on in the Middle East. However, having said that, in our little sandpit in the corner of the world of the financial markets, we were pretty much unaffected by it. S&P was holding up really well, and in fact it's higher than it was last week. But an eye should be kept on, as we described it last week's, the Treasury yields in the bond market as a 5-year heads back towards 5%. This continues, the S&P will go down. One of the trades we liked and we still like is this one here, the 3550 put spread. It's the most simple trade, and not only that, it's in its very low percentile when compared to an equidistant out the money put spread at this stage of the cycle. This particular one we're looking at is in its third percentile, so it's very low. I like that trade. If you are worried about S&P going down, I think this would be the trade to do. Decent exploration, so you still have a little bit more time left in it. One of the other trades I like for people who are concerned about the Middle East and how that will affect the markets, Lockheed Martin is a company that will likely benefit from an escalation in things going on over there. There are good trades to do there. One specifically when running big boy and saying, okay, I want upside. The one I particularly like is this one here out of that list, which is a call fly ratio 1/3/5, which means you're actually buying an extra option on the upside. And what effectively, first of all, that's also in its low end of valuation, it's 12th percentile, but also will give you a nice healthy P&L if we were to rally, especially short term. If Lockheed Martin goes back above 500, which is where it was earlier on this year, then you would actually make a lot of money out of this fly. It's very reasonably priced. I would suggest if that's your fear, that's definitely worth buying for that one there. So that's good value. Next week we also have Tesla's earnings coming out. Nothing really stands out to take advantage of, but there's not too bad risk reward trades here. This one particularly, this one's more of a shorter term trade. It will give you a nice play. Again, this will look good on a strong rally, and of course longer term, if you target that middle strike here, then that would also be a good trade. So it gives you a bit of flexibility here with an extra call on the upside, and that's looking at expiration for the 27th of October. Again, giving you a little bit more wiggle room after the numbers and just targeting a moderate rise. And so really the 270, 280, 2.5, 310 call fly, 1/2/2. Anything crazy happens to the upside, you'll do fine. And if a moderate rally to 282 to 285, and you'll be laughing, especially if you hold that one towards expiration. Anyway, that's all from me. Have any questions, please hit us up at leviathanfm.com, and otherwise have a wonderful weekend.